Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about Johnson & Johnson. And this stock kind of sticks out to me because it had a rapid rally over the past couple days, like 10%. And 10% isn't very typical in a stock that's a little bit weaker and laggardish like this. What really surprises me though is how Johnson & Johnson is up 10% and Procter & Gamble is down by like 3 to 4%, 5% over the past couple days. And it had a really awful session yesterday on Procter & Gamble. So it's kind of, I guess what I'm trying to say right now is that as people are selling their Procter & Gamble, they continue to buy Johnson & Johnson. So as long as Procter & Gamble continues to fall, which it most likely will, chances are it will benefit Johnson & Johnson, and many people will take that money and buy into Johnson & Johnson. Now, I also believe that these stocks are pretty durable. They're not, they sell non-durable goods, which is very good, considering that they're expendable and people to keep coming back to buy their soap and shampoo and stuff like that, and their diapers, which is obviously what Johnson & Johnson and Procter & Gamble both sell. However, I think people are trading these stocks a little too much. I think they're a little more volatile than they actually should be. And to be honest, a sudden move like this in Johnson & Johnson, right here we have an inverse hammer formation. Now, I'm not sure if you see it, but this is a reverse hammer right here. This right here, the long tail with the bottom sticking out, basically people bid up the stock, unable to. This is the open, here's the close. Sudden bid up, it couldn't really sustain above, and now it's starting to pull back. So again, this trade could only last for so long. As Procter & Gamble falls, Johnson & Johnson rallies. But I guess the main point I really want to bring out to you guys is this. None of these stocks are really that volatile. The business nature really isn't that volatile. Yes, I agree Procter & Gamble hasn't really been performing that well. Their return on equity wasn't really that great. Return on investment was bad. They were the laggards in the sector, granted. However, because there's such scale in these stocks and such a large amount of money at stake, and amongst the choice of all alternatives, Procter & Gamble, or would you invest into Facebook? Yes, both have similar market capitalizations, but the issue is that, again, investors need to have some place to invest into for safety. Procter & Gamble and Johnson & Johnson meet that criteria while having enough market capitalization to absorb large amounts of money. There aren't a whole lot of companies that can do this, and to me personally, I think the pullback in Procter & Gamble is a little overplayed, and I think the Johnson & Johnson overextension is also a little overplayed. Basically, both sides of the pendulum are swinging in opposite directions, and I think they're going to tend to go more towards equilibrium and get closer to those moving averages on both the Johnson & Johnson and Procter & Gamble chart. So it's going to be a while before the stocks start to readjust, but I don't think these valuations are very sustainable on either Johnson & Johnson or Procter & Gamble. I really don't think so. The scalability of these assets are too big, too large, and I don't think people are just going to sell Procter & Gamble and jump onto Johnson & Johnson more than they already have. So that does it for me for today. If you guys have any questions, leave a comment right below, and I'll be more than happy to answer some.